Alright, so what's good, y'all? In this video, I'm gonna be talking about 5 things that you should really know about if you want to get into trading, investing, or just anything dealing with the stock market, or not even just the stock market, but any financial markets, right? So I've been doing this for about 4 years now. Consistently, I'm talking about looking at charts move, ticks move, candlesticks move up and down every single day for like 4 years straight, every single day. I remember my introduction into the markets. Um, it was a bear market, so I didn't get the whole glittery part of the markets, right? I got the part where it was just like, every day a red day. You know what I'm saying? Stocks falling, everybody fearful. Like that's when I got into the markets. But everybody got a journey, and you're gonna know it. You're gonna learn and figure out like, okay, everybody got their own unique journey. But in the midst of the journey, it's principles that you just can't avoid. That's like it's gonna happen in everybody's journey. So in this video, I'm gonna just share with you 5 things that I feel like you need to know about, and I'm gonna just cut straight to the chase. I'm gonna be straightforward. I ain't gonna make the video too long. Right. The first one is lack of capital. So this is the first thing that I'm mentioning because, in my opinion, is one of the most important things. Trading and investing, you need capital, you need liquidity, you need money. You need not only just money, but disposable income, disposable money, right? Let me tell you, if you get into this business trying to use the money that you have now, that you're dependent on taking care of your regular everyday living expenses, if you try to invest that money, it's not gonna go right. You're gonna prolong your learning trajectory, right? That learning journey, you're gonna just make it longer than what it needs to be, because when you lack capital, not only does it affect your trading technically, but emotionally and psychologically, you just not gonna be there. The reason why you're not gonna be there is because you're trading from a perspective of lack, and you need this money. So if you need the money that you invest in, then you not gonna fully accept the risk when it's time to. When it's time to put on a trade, or it's time to buy some shares or whatever, take a swing trade, you're not gonna fully accept the risk that's needed to put on a trade and let it work itself out. You're not gonna fully trust your plan because you need for this one particular trade to work. And the reality in trading is you don't know which individual trade is gonna work or not. So you need money, and preferably you need to have 2 streams of income, right? One income where it's enough to take care of your living expenses, and then another stream where you can just freely dump into the markets. Or what I do is I attach the way that the income hits my account. That account is attached right to my brokerage account, so you can do that for your second stream of income. But you gotta have some money apart from what you're using to live in order to invest. If you try to use the money that you need to live to invest, you gonna just take yourself on a journey that you don't deserve to be taking. You know what I'm saying? Trading is not trading with little to no money. For one, when you have small accounts, it's not going to be as easy to use risk management strategies, right? Your position to get into one particular trade, right? Let's just say on this particular session, you wanted to take this trade, this double bottom right here, right? There's a potential that you might get stopped out depending on where your stop loss is, but your stop loss can also be dependent upon your account size. If you don't have a big enough account size, then maybe you might be working with tight stops. If you're working with tight stops, you're gonna be more likely to get stopped out when the price start to, go and tag tag the lows and try to scare people out. The people who gonna get scared out is you, because they already know your stop loss tight. You don't have a big enough account size to let your stop loss be flexible. You see what I'm saying? So a person with a decent account size, their stop loss can be somewhere reasonable where, okay, if the price hits this level, I'm out, I'm proven wrong. But also if it hits this level, I don't get stopped out because I got enough money in my account to let the trade breathe. See, if you don't have a lot of money to let the trade breathe, your stop loss gonna be right here because, you know, if it take you out this far, you wiped out. You see what I'm saying? That's trading with lack of capital, right? The only other way that you can really make things work as far as trying to trade with low capital is if your primary source of income is enough to take care of your basic living expenses. You living well below your mean, but then you also have enough left over. You see what I'm saying? Like, you really got some pure cash flow from your primary source of income minus all your expenses. If you got pure cash flow after that, then you can go ahead and, you know, start to invest in stock, because that's what people do. Like, if you got high income earners, like you got attorneys and doctors and people who have specialized knowledge, they make enough to where they don't have to get a second stream of income or do this and do that. You know what I'm saying? With me, hell, I'm trying to do Uber Eats or whatever. I'm trying to do everything I can to make that second stream of income to pump into the, you know what I'm saying? But some people, they primary source of income just so happen to be making them enough to just go ahead and invest. So that's the first thing, you know, lack of income. You need some money to trade. You don't want to be too emotionally involved in every individual trade because, you know, you depending on this trade to work out. You can't trade like that because you have to trade from a random probabilistic mindset, meaning like you fully accept the risk as soon as you put on every single trade. Meaning, when I say fully accept the risk, I mean the trade can work or it doesn't have to work. That you can lose this trade and you're completely fine with whatever loss you predetermined that yourself to make. So that's the first thing. The second thing is, however you earn money, it must align with the market times. So I pulled up my chart, right? I'm gonna go to a 5-minute time frame, and I just want to show you something. If the longer you start to look at financial markets, the more patterns you start to realize. So a early pattern you're gonna realize is time periods, time frames, and volume, right? So you're gonna easily learn quickly, especially if you trade derivatives like option contracts where like time plays a huge role in your buying decision, your selling decision. You know what I'm saying? If you were working with time decay, you're really gonna find out quickly how important time frame is, how, you know, the different times of the day, what times to trade in the day, right? So let me show you here. This bottom, what you see at the bottom is the volume, right? So I keep the volume up because volume is the second most important thing besides price action, right? Volume is considered price action, right? So volume is letting you know how many people are buying and selling the shares or the derivatives of this asset right here. So if I go to a different stock, same thing. I just happened to open up QQQ, which is an index fund that I talk about a lot because this is what I use to gauge the overall sentiment of the market. So notice how the majority of people are trading in this time period right here from the market. So mind you, Eastern, the market opens at 9:30 in the morning. So from 9:30, which is this first candlestick here, we see here, right? 9:30 up until about 11 o'clock. Let me move this out of the way for y'all. You see, we start to die down after 10:30. After 10:30, the volume started to just kind of die down. Look at where the volume is up here. Let me delete this for y'all real quick. I'm so glad I got a mouse because I can show y'all my charting skills. So look in this area right here at where the volume is. You see, if you look over here to the far right, it says 128K, right? But then just at 11, let's just call it 11 o'clock. Let's go to 11 o'clock. We down here where it says 24K. So we went from about So about 100,000 less participants or volume in this time frame difference. So every single day you're gonna notice this though. You're gonna notice that, okay, from 9:30 to 11:30, the majority of the humans are trading. Look, it's the same pattern every day. You're gonna see the same pattern. You're gonna see a downward slope like this towards 11 o'clock. The most dead moment, I say dead, I mean the least amount of trading activity, the least amount of participants, is always noon. So if you got a job and your job don't align with the times of 9:30 to 11, then it's really gonna be difficult for you to try to day trade. The reason why is because the volume is low. We just went over volume. If the volume is low, not a lot of people are gonna influence the price. Remember, price is only affected by supply and demand. If it's less people in and it's less demand, it's less activity, it's less buying and selling. So if you make a buying decision or you try to get into a trade at 11, 12 o'clock, because that's when your schedule permits you to, and the price movement is very slow, right? Let's say you bought some option contracts, and yes, time decay affects option contracts. Well, then what if the price of the asset you're trading does not go up or go down in the direction that you desire it to go in, because there's no people participating right now, right? So you want to get the biggest moves, and you actually make the most money in the time periods where the volume is the most. The volume is the most from a 9:30 up until about 11:30, 12 o'clock. After 12 o'clock, people going to lunch. You got all the different big boy financial people. They done placing their trades, right? And then you got that power hour, like from 3 to 4, 3:30 to 4. Yes, like we call it power hour. A lot of people, you will hear that like all the gurus call it that. A lot of financial people call it that. But you got the volume picking up for that last little hour. Typically, a lot of people are placing like swing trades for the next day or for the next week or whatever like that, because being that the candlestick is closing at the end of the day, the daily candlestick is closing. That gives us a lot of information. But nevertheless, I ain't talking about that right now. But we gonna continue talking about how your job or the way that you earn your money needs to be congruent with how the market is. The market's volume is from 9:30 to 11:30. Let me tell you, I worked at AT&T in Pines in Miramar, Florida. I work with dude Andrew, Yane, and forgot my other dog name. Real cool people, man. I really enjoyed my time there. But I had to be there from 10 a.m. to 8 p.m. And mind you, we just went over how the market is active at 9:30. So another pattern that I noticed that you probably gonna catch on to is that at 10, 10:30, and 11, you get a move. You get some kind of reversal. That's another little gem, right? So I would be at work. So this would be how the scene. This is I'm gonna set the scene for you. So I would wake up, boom. I'm already up like 7:30, 8. I'm watching the futures market just print candlesticks. I'm trying to see. I'm a geek when it comes to this, so I'm already looking at the markets early in the morning. I get prepared for work, and I'm really just waiting to get there at 10 o'clock. So I stayed at the time with my grandmother, just about 8 minutes away from AT&T. So I could leave if I had to be there at 10, and mind you, I had the key, so I'm unlocking the door. If I had to be there at 10, I would probably leave the house around like 9:40, 9:45, get there, boom. I'm always on time, never late. So my plan was, at 9:30, so mind you, if the market opened at 9:30, bro, I'm on my phone. I got my phone in my hand with TradingView popped open to see the market open. While I'm walking to the door, I got my bag, because I got my computer, my screens with me, my mouse, iPad charger, whatever, phone. But I'm steady looking at the market with my phone in my hand, and I'm turning the key, unlocking the door. And let me tell you where I ran into situations. Mind you, I'm working at AT&T, so people coming in there tripping about their phone bill, service, whatever. People would come in there and intervene with me right at 10 o'clock. As soon as I sat down inside the store, people will come rushing in. I'm talking about I open the door at 10, somebody in at 10:01. And mind you, I got my chart open because I'm trying to trade. But I never could have my focus fully focused on my attention fully focused on the charts because I was at work. So I was trying to make that work for like 8 months. And guess what? I was losing money. I wasn't making money. I was losing money because I could not have my focus directed to the charts. It was always, I'm on the charts, but then the door opens, somebody walking to the store, I'm having to service them. So that's another thing. Your job must align with the market times. The next thing is this. You must treat trading like a business. What I mean by that is, think about it. When you start a business, one of the first things that you do is you figure out your startup costs. You figure out, okay, what is it gonna cost me to actually start and operate the business, get it running? How, up until the time I can sell something and someone can buy something, what is it gonna cost me? When it comes to trading and investing, you need to figure out the same thing. What kind of subscriptions am I gonna have, right? Meaning like subscribing to real-time data, having different trading journals or online journals, or paying for futures market or whatever it is. You got to figure out, okay, what is it going to cost me per month to operate my trading business? And then also, you got to consider this. You're going to have business expenses. So to operate a business, businesses have business expenses where it costs them X amount of money to operate the business per month, per week, per day, whatever. In trading and investing, it's the same thing. But guess what? Your business expenses is the losses that you take in the market. Every loss that you take is a business expense. It's a cost of doing business. That's how you have to look at it. So when you take and I'm not talking about psychological losses, meaning like it was an actual trading error. I'm talking about the trades that you take that were based off your plan, based off your methodology, with proper risk management, and it was just a random distribution of wins or losses that occur naturally in your methodology. Now the losses are the business expenses that I'm talking about, right? So that's why I say, treat trading like a business. Startup costs, business expenses, and then finally, the same way that an entrepreneur puts his attention and focus on his business is the same way you need to put your attention and focus on your trading business. So just earlier with the second point I made about how your job must align with the market times, it's the same exact thing. You cannot be distracted from the charts when you making buying and selling decisions. If you're gonna be a real trader, real investor, this gotta have your full attention. Nothing can distract you because you competing with people who really do this. You feel me? Like you competing with me. You competing with Aristotle. You competing with hedge fund managers, people who've been doing this for 30 years, 40 years. You competing with people who've been doing this before there was even technical charts. So, you gotta put your eyes and your focus and your attention and your heart into this, right? That's why I say treat it like a business. Now, the fourth thing is this. Trading is meant to amplify your wealth. Trading is not meant to become wealthy. It's not a tool to get rich. Now, it can be, I'm not trying to be pessimistic or negative, it can be a tool to get you to the next level in your life financially. But trading, like taking day trades or swing trades or scalping, is used to amplify the money that you already have. This goes back into the first point that I was making about lack of capital. Trading was always meant for people who had money already, right? If you go look at Mark Douglas's seminars, he had a bunch of old people in there, people with 401ks, people who were retired, right? These were like retired surgeons and retired attorneys and people who had a fortune but were done working. You see what I'm saying? They already had the money. They were trying to figure out how to amplify the money. They weren't trying to make crazy returns like how people is now. They was probably just trying to make maybe 10% off of $1 million. You see what I'm saying? So trading is not a tool to, hey, I'm gonna get rich in 2 years. Or you can, but think of it as, remind yourself that, hey, Trading is used to amplify the money that I already have. So always be thinking, okay, any money that I get, I could turn this money into more money by trading and investing. That's the mindset you gotta have. Not, damn, I got some money, man, I'm finna try to get rich off the stock market. No, it's not gonna work like that. And then the last and final thing is, I know this is gonna sound real cliche, but the last thing is mentorship. So I got a couple of Proverbs verses that I got from King Solomon that I like to just read. And I'm not a Christian guy, all churchy type dude, but I really love the Bible, one of the greatest books ever put together. And listen to this advice. It say in Proverbs 23:12, it say, apply thine heart unto instruction, and thine ears to the words of knowledge. Right? Then let's go to 12. I'm gonna go to 23. No, I'm sorry. Yeah, 23:12 and then 23:23. I want you to listen to this advice. It say, buy the truth and sell it not. Also wisdom and instruction and understanding. Then I'm gonna go to 15:14. It say, the heart of him, or the mind of him that hath understanding, seeketh knowledge, but the mouth of fools feedeth on foolishness. And then I'm going to read 14:15. It say, the simple believeth every word, but the prudent man looketh well to his going. So pretty much what I'm getting at is, you need counsel, you need membership, you need mentorship. You need somebody who has already taken the route that you are trying to take. Someone who's already been through the journey that you're trying to embark. And take hold to instruction. Be wise, right? Receive counsel, get instruction, get understanding. And don't try to make what could be a quicker journey turn into something like this because you wanted to do it by yourself. That you don't get a badge of honor for trying to learn stuff by yourself. It's never been like that. Napoleon Hill has a whole entire principle on mastermind in his book. And a part of masterminding is getting some sort of mentorship. If you can trust people, the reason why I read the last verse is because if it says, the simple believeth every word, but the prudent man looketh well to his going. Be careful who you choose for mentorship, right? Don't be like the simple man and believe with every word. Really feel people out, like, watch their content, watch their YouTube videos, make them prove stuff. You see what I'm saying? Be wise, be prudent, seek for knowledge. It say seeketh knowledge and understanding. You need to be going after this. You can't just sit around and be trying to just go on, scrape on YouTube. And, eventually, bro, you're gonna have to intermeddle with someone and actually connect with somebody who you trust. That's just how life is. I mean, think about college. Any type of specialized knowledge that turns into some kind of professional practice, you got to go through college. But really, that college is just you getting mentorship. So think of it like that, man. Don't try to get into trading and investing and then it take you 4, 5, 6, 7, 8 years to learn what you could have learned in a year had you just connected or received instruction or gotten mentorship from somebody who already went through what you about to go through. You see what I'm saying? So those are my 5 little things that you need to know from the 4 years of trading that I've had. It's just my wisdom and knowledge that I've acquired that I feel like I owe you. I can save somebody some time, energy, money, a lot of money, right? And yeah, and also whatever I tell you, you're gonna find out for yourself anyway. If you really about this and you really love this, you're gonna come back to this video and like, damn, like that boy told me, like, trust me. But that's all I got though. I mean, the video, 25 minutes, I don't mean to have it that long, but it's probably gonna be my longest video. But these 5 things are things that you need to know about from the 4 years of trading that I've